Yes, you don't need to pay any taxes even when your salary is up to 16 lakhs if you have planned your tax correctly, which I'm going to show you in this video. I am CA Mahadev is going to show you detailed step-by-step process on how to save your tax, calculate your tax liability, and also old versus new regime. So don't skip this video and watch it till the end, and you are gonna save lots of taxes. Let's begin the video. Now I'm sharing my screen, and here you can see the salary structure of an employee having 16 lakhs package. And this is how the salary breakup of different components will typically look like. Now let's see how this person can save the tax and no need to pay any taxes. As shown here, this income of 16 lakhs after effectively utilizing all the tax planning can be brought below 5 lakhs, and as you all know, the department will offer tax rebate for the person having income less than 5 lakhs, so that you need not to pay any taxes if your income is below 5 lakhs. And now let's discuss one by one on how we can use these options of tax deductions or tax exemptions so that we can pay the least possible amount of taxes. Remember that the company's contribution to PF will not be considered as salary for the purposes of tax. That means from the CTC you can straight away reduce this company's contribution to PF to arrive at your gross salary for the purposes of our calculation of tax. But remember, there will be two components of PF, that is Provident Fund, which we will receive. One is employee's contribution and the other one is company's contribution. Here only the company's contribution will not be considered in gross salary, but the employee's contribution which we are paying can be taken as deduction later stage, which we will discuss in further coming video. But for now, after calculating this gross salary, let's see what are the options available for us to reduce this income even more further. And let's begin with HRA first. This HRA we can claim is limited only up to a maximum amount, which should be calculated as per the rules specified in Income Tax Act. Now let's see how this HRA is calculated and what is the eligible amount that we can claim as a deduction. For that, we need to calculate these below amounts. First one is actual HRA received. This will be found in your payslip. I am taking that. And second one is 50% or 40% of basic plus DA. This will be the basic plus DA component, and 50% is applicable when the employee is living in a metro city. And if the employee is living for rent in a non-metro city, then it will be 40% of this basic amount. And the third figure we have to calculate is actual rent paid less 10% of the basic plus DA. It means, let's suppose the rent per month is 30,000 and we will be paying it for 12 months. And from this amount we should deduct 10% of the basic plus DA amount, which comes to 2,96,000. Now this employee can claim HRA deduction, which will be least of all these three amounts. In our case, it will be 2,96,000. So from this calculation, we have arrived at this HRA, which we are eligible to claim as a deduction from our gross salary. But remember, to claim this HRA, we should have rent agreement and rental receipts to be submitted as a proof. So I recommend you to make the arrangements with your house owner to get the rent agreement and rental receipts for your rent payments regularly, so that we can claim this HRA deduction without any problem. Now, after discussing about this house rent allowance, let's see what is the next option available for an employee to claim deduction from his salary, that is LTA or leave travel allowance. Under this leave travel allowance, the employee can take deduction for the amount which he has incurred for traveling within India towards self and family. So the condition to claim this is the travel should be within India and not abroad, and the expenses should be only for traveling, which are train, flight or bus. That means you cannot claim the expenses other than traveling. Like example, we are staying in a hotel or having food bills. Those cannot be claimed under this, but only the expenses towards traveling can be claimed under leave travel allowance. These expenses can include both the employee and his family's expenses for traveling, but it should be taken only up to maximum of 50,000 in any year. So from next time when you or your family is going on a vacation, please retain your tickets so that you can get the tax benefit under this leave travel allowance. Apart from these deductions, there is another deduction which is available for an employee to claim from his salary, that is standard deduction. To claim this standard deduction, there are no conditions attached. The employee can straight away reduce 50,000 from his salary under section 16 of the Income Tax Act. So I hope you have understood this benefit of standard deduction, and let's see the next option, which will be interest on home loan. Under this section 24, the employee can claim the amount paid towards interest on his home loan, but the condition is that the property should be under the name of the employee and also the loan should be taken by the employee. And if you are satisfied these conditions, the interest part which we are paying on this house loan can be claimed as a deduction from your salary. But remember, the total EMI will not be eligible for the deduction under this section. Only the interest part can be claimed as a deduction, and the principal part which we are paying for this loan will be claimed in the next section, which we will discuss later. But for now, to discuss about this interest on home loan, we should remember that only the interest payment towards that home loan will be considered to reduce from the salary, and that will also be only up to 2 lakhs per year. That means if you are paying interest of 3 lakhs, we cannot claim the total amount, but we can claim only 2 lakhs for this purpose. After understanding these various options we are having to reduce from the salary, we now see chapter 6A deductions, which will contain these sections, and I will explain clearly one by one how these chapter 6A deductions can be utilized to reduce our taxes furthermore. And within this, let's first see this section 80C deduction, which enables us to take the maximum deduction of 1,50,000 if we have paid or invested any of these options available for 80C. Let's see one by one what are these options. First one is EPF, that is Employees Provident Fund, which will be deducted from salary and paid in Provident Fund every month. So as we remember, at first we have spoken about the company's contribution to PF, which will be reduced straight away from CTC to arrive the salary. Now after arriving this salary, we can reduce employees' contribution towards this PF under section 80C. And also we have discussed about paying home loan. That means the interest part of the home loan will be reduced under section 24, but the principal part which we are paying for this home loan will be considered under this section 80C. This 80C also gives us an option to save the tax by paying or investing in these below funds, which will be like Public Provident Fund, Sukanya Samruddhi Yojana, also post office FDs and bank FDs with maturity period of 5 years. And even if we are paying LIC or unit linked insurance plan, we can claim deduction under this 80C, and that we can save the taxes. But remember, the payment towards all these combined should be limited only up to 1.5 lakhs. For example, if we have taken insurance policy of 50,000 and we have made bank FD of 2 lakhs, which will be combined 2,50,000. But according to this section, we can claim deduction only up to maximum of 1.5 lakhs. And I hope you have understood about this section completely. Then let's move on to the next benefit available for us, which will be NPS, that is National Pension Scheme. Apart from these public provident fund and other investment options available under ATC, we will be also having another option for investment, which will be NPS. And if we have invested in this national pension scheme, we can claim it deduction from our salary and reduce our taxes. And under this NPS, we will be having two options available for us. One is which we can directly pay or invest in NPS, or second thing is we can ask our employer to cut this NPS investment from our salary and deposit it directly towards under our name of NPS. The one which we directly deposit in NPS, we can claim deduction up to 50,000 in an year, and the second one which we can ask employer to deposit NPS in our name. For that, the maximum limit that the employer can deduct can be 10% of our basic plus DA, which in our case will comes to 64,000. Under this section 80D, we can claim the amount which we are paying towards health insurance. But there are certain limitations that the maximum amount which can be allowed as a deduction. Let's see what are those. See, the maximum limit we can claim as a deduction for the health insurance paid towards self, spouse and children will be 25,000, and for our parents who can be senior citizens, the limit will be 50,000. And if your parents is non-senior citizens, then the limit will also be 25,000 for them too. So by this we can claim 25,000 for the self and 50,000 for the parents, total combining to 75,000 as a health insurance payment. But the condition is that we have to actually pay this health insurance, and we should keep ready the receipts of the payments for submitting as a proof. Also, the one point I want here to discuss is that we can also claim 5,000 under this section, which will be incurred towards preventive health checkup. That means we need not to take insurance, but we can also claim the amount incurred towards health checkup for our family, but the maximum limit is up to 5,000 in an year. For the combined maximum limit can be 75,000, which will be 25,000 for the self and 50,000 for the parents, including the preventive health checkup. And as you remember, the insurance which we are paying for life, that is term insurance, can be claimed under the section 80C, and the health insurance which we are paying can be claimed under this 80D. And it is also important for us to have this health insurance and life insurance. So I strongly recommend you to take these insurance policies, and you will also get benefit of this tax. With now, let's move on to the next option available, which is interest on education loan, and see what are the conditions to take deduction of this interest on education loan from our salary. Under this section 80E, we can claim deduction for the interest paid towards the educational loan, but there are certain conditions, which are this deduction will be available only for the payment of interest component. That means principal component which we are paying to repay the loan will not be considered under this section for the deduction from our salary. And this education loan can be taken for the education of self or spouse or children, and there is no maximum limit that we can claim under this section. Whatever the interest we are paying towards the educational loan, we can straight away claim that as a deduction to reduce our income. So I'm strongly recommending you to take educational loan for the studies of your children or self, so that you can also get this tax benefit under section 80E. And by utilizing all these tax planning options available, this employee has brought down his CTC of 16 lakhs to the taxable income of 4,88,000, which is below 5 lakhs, and is need not to pay any taxes as the income is below 5 lakhs. And not only this, we are also having other options to claim deductions which are available, but for claiming those deductions we need to satisfy some conditions which I will discuss now. Let's see what are the other options available for an employee to further reduce his income. In that, first we are going to discuss is children educational allowance and hostel allowance. Yes, if an employee having children, he can claim for educational allowance and hostel allowance, but only the limit is up to maximum 2 kids. That is, if an employee having one kid, he can claim deduction for one kid, but if an employee having 3 kids, he can claim only up to 2 kids. The amount here mentioned in the Income Tax Act is for the educational allowance we can claim 300 per month, and for hostel allowance we can claim 100 per month. And also the next option available for him to further reduce his income is telephone or internet reimbursement. Sometimes we can see our company is paying some portion of our salary as a reimbursement for our telephone or internet bills, and if those are reimbursements we can reduce those amounts from our salary, which is obvious. The next options which are given by the Income Tax Act for persons who is having self disability, that means if an employee is having disability, he can straight away claim deduction for 75,000 or 1.25 lakhs based on the severity of the disability. Likewise, if the employee is fine but his dependents, any one of them, is having a disability, he can also claim the same deduction of 75,000 or 1,25,000, depends on the severity of the disability that person is having. And the employee can also claim expenses he has incurred towards medical expenses for treating any specified disease, and this expense can be claimed which are actual payments, that means the employee should have actually incurred these medical expenses. The maximum limit we can claim after incurring this medical expense is 40,000 normally, or 1 lakh rupees in case the patient is a senior citizen. Also, there are other sections like interest on electric vehicle loan. This can be taken up to maximum of 1,50,000, but the condition here is that we have taken this electric vehicle before 31st March 2023. And if the employee is not receiving HRA as a part of his salary, that means company is not giving breakup of HRA in his salary structure, then he can claim maximum of 60,000 HRA which he will be paying as a rent. The other section which is most important is that ATEEA, which is interest on home loan. If you remember, we have discussed about interest on home loan under section 24 but can be taken up to maximum of 2 lakhs. But with the introduction of this section, the employee can claim the interest payments towards home loan in addition to the 2 lakhs. For example, if an employee is paying interest on home loan, let's say for 4 lakhs, he can claim 2 lakhs under this section and only 1.5 lakh under this section, as this section limits the additional interest deduction for maximum up to 1,50,000. So that if you are having interest on home loan, let's say 3 lakhs, we can claim 2 lakhs under section 24 and 1 lakh under section 80 EEA. I hope you have understood this point. But to be eligible to claim this 80 EEA, there is only one condition, that this house is purchased between the financial year 2019 to 2022. That means before 31st March 2022. If you have purchased this house, you can claim the interest payment towards it in addition to 2 lakhs, but only maximum of 1,50,000. I hope this point is clear, and let's see the last deduction which is available, that are donations. See, we may be paying some amounts towards donations towards charitable trusts like Save the Children or even temples. For these payments, we are eligible to claim deduction under section 80G. But these deductions will be limited to 100 or 50% of the actual payments, depends on whom we are paying. And that's the end of our discussion to claim and to see what are the options available for us to avail as a deductions from our income to reduce our tax liability. The reason that these deductions are discussed separately is that we cannot claim these deductions straight away. That means we have to first satisfy these conditions and later we can claim these deductions. But in case of these deductions, we can plan our taxes, and to take these deductions we can satisfy these conditions easily. That means we can plan our taxes in case of these conditions, like we can invest in fixed deposit to take this deduction of ATC. We can take education loan now to take benefit of the interest on education loan. We can take home loan, or we can claim HRA by taking the rental receipts which we are paying. But for these deductions, we cannot satisfy these conditions to take this deduction. Like to take 1,50,000 deduction, we cannot go back in time before 31st March and purchase electric vehicle. Similarly, to take these deductions, I cannot recommend you to have kids now. Or to take these deductions, okay, I hope you have understood the point that to claim these deductions, we have to first satisfy these conditions and only we can claim these deductions. But in case of these, we can plan our taxes and satisfy these conditions to take maximum benefit of these deductions, and thus we can reduce our taxes. And this is the end of our discussion regarding the various deductions or options available for us to reduce the taxes. Now let's see, after arriving this income, how to calculate the tax. But before that, if you have liked this video so far, please make sure to hit the like button to encourage me so that I can make more and more of this type of content which will be very useful to you. And with that, let's continue to the video. And now, coming back to the video, let's see how the tax liability should be calculated based on the taxable income which we have arrived. To calculate this, we need to open our browser and search for tax calculator. The first result we are going to see is tax calculator from income tax website itself. And now select the assessment year, which will be 24-25 in case of you are filing return in 2024 and the taxpayer is individual as he is an employee. Now it will ask whether you are opting for new tax regime. As to claim these deductions, for the time being we will select as old tax regime, but I will discuss the benefits involved in the new tax regime or what to choose between new or old in the coming video. So here we should enter the taxable income which we are getting, 4,88,200. See, as I said, the total tax liability will remain zero as this amount is less than 5 lakhs. Let's check after entering 5,20,000, and you can see the tax is automatically calculated. Now let's say an employee, if he is receiving LTA only up to 30,000 from his company, and also the health insurance he is taking is only 40,000, and also he is not having any educational loan and is not required to take now because he is already well settled and his children are also well settled, then I will make it 0. Now the total income will be 6,43,200. See, as you see, the tax liability is calculated automatically. And instead of educational loan, if an employee has taken electric vehicle loan before 2023 and he is paying interest of only 80,000, let's say, the taxable income will be 5,63,200, and in this case the employee is gonna pay tax of 26,146. So I hope you have understood how you should reduce these amounts, and based on this amount you can calculate the total tax liability by coming to income tax website tax calculator. With that, let's move on to the next and interesting part, whether to take old regime or new tax regime. So to decide whether to opt for old tax regime or new tax regime, we have to first understand the differences between these two. As you can see on screen, these are the rates we have to pay for the tax on. For old tax regime, it will be dependent on the income tax, whether it's up to 5 lakhs, up to 10 lakhs or more than 10 lakhs, and these will be the rates we have to pay. Also, for a person having less than 5 lakhs income, a rebate will be offered. That means he need not to pay any taxes if his income is below 5 lakhs. Similarly, in the new tax regime, there are more income slabs to pay tax and the rates are calculated accordingly. And also under new tax regime, the rebate is offered for an income which is less than 7 lakhs. So by seeing this, you will be in a opinion that new tax regime is of course beneficial as it offers rebate for even 7 lakhs and we need not to bring our income to 5 lakhs. And also in new tax regime, if you can see, If the income is 9 lakhs, we can pay only up to 10%, but here when there is an income of 9 lakhs, it will follow in this slab and we need to pay 20% of taxes. And obviously the new tax regime is asking us the less rate to be paid. But here is the catch. In the new tax regime, there are no deductions allowed. There are allowed, but only two deductions which we have discussed is allowed under new tax regime, and under old tax regime everything we can claim as a deduction for tax saving. Well, let me help you understand this with an example. See my screen. There are deductions which are not eligible to be claimed under new scheme. To be specifically, all deductions cannot be claimed under this new scheme. Only the standard deduction of 50,000 and the NPS, which will be deducted by the employer and maximum up to 10% of your basic plus DA salary, can be eligible to be claimed as a deduction under this new scheme. So in our example, if we compare these two under old scheme and new scheme, and a point to remember that this contribution by the company cannot be considered into salary for the purpose of tax, that will remain same under both old and new schemes. So after that, let's check upon these deductions that this HRA, LTA, home loan cannot be claimed deduction under this new scheme. And so these deductions are available under old scheme. Can we say that old scheme will always be beneficial? The answer is no, because these deductions are options available for us to claim. But what if an employee is living in own house for which he is not paying rent, so that his HRA cannot be claimed and it will be zero. Similarly, he might not be having educational loan. In this case, the salaries will be looking like this under old regime and new regime. Now let's see what will be the tax liability under both. So here let's check what will be the tax liability under both schemes. Here I am entering this income as per old scheme, and it will gives us the tax liability of 97,000. Let's check what it will be under new scheme. So now under new scheme, this is more than 1 lakh. Even though the tax rates are less, because of these tax planning options available, here we are getting a more tax and here we are getting less tax. Now let's see what if your salary is 8 lakhs. Here let's assume we are not asking company to pay any PF and we are directly drawing it in our salary. And also let's say the employee is not having any home loan, and also he is not investing in ATC as he also opted from PF. Then the total income under old scheme will be 5,31,000, but under new scheme it will be 6,86,000. So let's check how the tax liability will be calculated on these incomes. So under old scheme, the tax liability comes up to 19,500, whereas under new scheme, it will be 0. Because as I said earlier, if the income is less than 7 lakhs in new scheme, there will be no tax liability to be paid as department will offer you a rebate. And that's how, based on your total income, the tax will be changed between old and new scheme. Also, you have to consider whether you are availing these deductions which are available under old scheme. And if you don't have any of these deductions which you can take under old scheme, you can directly simply opt to new scheme as the tax rates will be less there. So I hope you have understood how to calculate the taxes and also to choose between this new scheme and old scheme. And that's all from my side, guys. I hope you have understood all the points discussed and found this video useful. And To get all the updates about this type of useful content I'm going to post, make sure you subscribe to the channel and hit the bell icon. Having said all this, I am Mahadev signing off for today. See you in my next video. Until then, keep following Money Grower and let's grow all our money together.